شكرا جزيلا. شكرا جزيلا، سعيد جدا بهذه الفرصة بالمشاركة معكم في المؤتمر. اليوم أنا سأقدم عرضا بعنوان Fintech from coins till central bank digital currency or to central bank digital currency. I guess you can see my screen, right? Just to confirmation that you can see my screen.
Yes, we can see.
Yes, great. Thank you very much.
Yes, تفضل أستاذ. واضح العرض.
Let me start by using this diagram first of all about financial technology. I cite this from Alt et al., an interesting study on financial technology. According to them, actually, financial technology has four phases, so it can be linked even to 15th century. And here probably I can share with you some of these notions that can support Alt and et al. I took this photo when I was in Lund University Historical Museum, and as you can see here, probably this, according to the study I just mentioned, Alt et al., this could probably, or we might consider it as the roots of financial technology, considering that people during the 15th century used some very primitive tools to create like financial tools. This is what I mean with coins, to do some financial transaction. Here I partially agree with Altan et al. That this could somehow link to 15th century, but on the other hand, if we go, and here this is another photo. I took this photo in Beirut National Museum in Lebanon. Here we can see as well that ancient society as well, not only in 15th century, but even like ancient society like Phoenicians on old in East Bank of the Mediterranean, all Egyptians, all of these ancient society also used these coins to do financial transaction. This is another photo from another area. It's from National Museum in Malaysia. So overall, I would partially agree with Altan et al. That financial technology the roots of financial technology could be seen in 15th centuries when we consider coins, because coins in some sense, as you know, that had used by various ancient societies. Let me go now to the second phases that Alt and et al. Mentioned in their diagram. So here, this is the diagram again, Alt and et al. Mentioned in their studies. And as you can see here, we have four phases. The first one is the using physical media like coins, hammer to do some coins and to do financial transaction. The second one, which might be considered as well the roots of financial technology, is the analog technology. And analog technology means the technology we use to extract information from its surrounding environment and send it far away. The photo, the image that I show now, I borrow this from encyclopedia, and this is what's called analog computer. So this might be seen as well a kind of roots to financial technology, the current one that you and me can use today. The third phase, with most people would agree that here we can see the probably the first financial technology that people use, which is banking IT. And a very good example, I guess, ATM machines. So ATM machines, especially the introduction in ATM machines in the United States in 1956 and then later in Europe in 1960s, these machines represent probably the big brother, if I can use this terminology, the big brother for fintech. So in some sense, the first phase I just showed the coins, and the second phase I just shared with you the analog. But of course, don't need to have when you don't need to have cash in your pocket, and instead you can go to the ATM machine, put your card, and take cash, or do some financial transaction. Let us see to come in line after Professor Mustafa here. I'm come in line and support his his presentation. Here I have like some figures from various countries, and you can see that the number of ATM teller machine per 100,000 adults. And this is from International Monetary Fund. So I took this from International Monetary Fund website. You can access the same data, financial access survey. So as you can see, in some countries, we can see that there's we can see that these ATM machines are like probably more common in some countries more than others. So take, for example, Australia in green. You can check as well France, and in red, we can see that the number of ATM machines per adult is more than if we compare to the one in Malaysia. The same, the number is limited as well as in Algeria. Going forward here, I'm trying to present the same data, but probably in lines, we can see the trends that in some countries there's kind of decrease, but in other countries there's kind of somehow slight probably increase. But still, even that we just mentioned that the number is high in Australia, but the trend is decreased. That means more and more people, less people, or like the number of ATM machine per 100,000 person start to be less. Going forward now, if we would like to go from ATM machine to the number of debt cards, and I'm still using the same data set, the same one that you can access to from International Monetary Fund. Here we can see different story. If you can see the line in green, which is the Brazil one, we can see that the number of debt cards is increasing in Brazil, while the same number is decreasing in Sweden, the one like in purple. So we have like Malaysia, somehow the number, the red line, somehow the steady. So what could these two charts tell us? That first of all, in some countries, the number of debit card is decreased, while in other countries, the number of debt card is increased, which meaning that people are using like probably different means to conduct financial transaction in countries. And now we talk about ATM machine, we talk about debt cards, and let us go one step further to check how things look like in mobile and internet banking transactions. So we can see like an increase, a kind of increase, especially this is clear in the case of Sweden. This is clear in the case as well of Brazil. So can you see that there's kind of very sharp increase in these countries, as well as in the blue one in Malaysia. So most likely, instead Cameroon here, and I have in my sample, most likely we can see that the number of those mobile and internet banking transaction is increasing in various countries. This is a map. I use here a different database. I use database from Global Fintech database. You can also access this one. It's available at the World Bank. I took the statistic and I use another software, Orange Data Mining, to show how the percentage. This is made or received digital payments in the past year. So the question whether a person made or received digital payments in the past year. The data belongs to 2017. The report was published in 2018, but the data belongs to 2017. There's a new data which available now, so if someone would like to update the data. The numbers in yellow, which mean there is a high percentage, meaning high percentage of people got a chance to make or receive digital payments during the last year. The number in blue, which is low percentage, meaning the low percentage of people who got a chance to make or receive digital payment. We can see as well a green, that's mean middle, somehow 40-50%. You can see it's clear that in like west north of Euro, there is high percentage of people who got a chance to do made or receive digital payment. Unfortunately, the percentage is low in Africa, and not in all Africa, but at least as I can see now from north of Africa and somehow in West Bank of Africa. While the Euro, we have like two stories. In north and west of Euro, the percentage is high, is in yellow, but somehow in green in West Euro, which is moderate. And in Asia, you can see that some in South Asia, India, for example, the percentage is somehow low. But when you move forward to Hong Kong and Singapore and Malaysia, the percentage start to be high. We have like moderate percentage, also 40-50% of people who got a chance to make or receive digital payment in Latin America, but very high in when it comes to US or Canada. I will try to probably to pass some slides to be in line. Here I'm trying to compare the situation for the general population, but also for the population, those who consider as the, with a low income, or as the data call them, the poorest 40%. So we ask the whole population, first of all, whether they get a chance to make made or receive digital payments, but also those with the lowest income. You can see that we have very clear difference, like in some areas on the world. In Latin America, most of people, like 40% of people got a chance to do like financial transaction, but when they ask only poor people, they found like very low percentage of them who got a chance. We have also differences when it comes to Africa. In Africa, we can see, especially like in South-East Bank of Africa, we have a group of countries, you can see the numbers change from green to blue, meaning that poor people have lower chance to conduct financial transaction. This table probably represents how much the gap between rich and poor people. Unfortunately, in Asia and Latin America and somehow in upper middle income, you can see we have like a huge percentage between poor people and rich people, the gap. And here I'm talking about socioeconomic classes, and I'm using the terminology that World Bank use. So we have like somehow 25% in terms of differences between like those who have high income or have a lot of wealth and those who have low income or low amount of wealth. While the percentage is not so big in other countries, in Euro, like for example, 4%, in Euro and Central Asia is up to 10%. Meaning that if someone has high income and a high amount of wealth and living in this red area, that he or she will be able to access to digital payments more than if he or she belongs to those who receive like lower amount of income. So now going forward, I will talk now about the fourth phases I mentioned in the diagram, and I'm borrowing a new figure from Gomber, Professor Gomber from Frankfurt Business School in Germany, and here they try to use this scope of finance. It's very interesting, probably to see financial technology. So here, this surface shows us the main fintech solution that we can use: digital financing, digital money, digital payments. And the upper one here, the roof, shows us the technology that we need to use in order for today. When you pay, or your mobile application is fintech, is like the solution. But mobile application, as you know, in order to conduct it, there's a lot of technology support this one. I should mention briefly that despite that today a lot of people are using like mobile banking, but at the beginning was not so nice. So in Germany, like between 2003 and 2006, 15 German banks stopped mobile banking due to the lack of use. In Taiwan, for example, 2003, less than 1% of people used mobile transaction. And now let me go to the digital money, and especially here I would like to distinguish between what could be seen non-sovereign cryptocurrency. I mean digital money issued by a private sector, like Bitcoin, or the project that Facebook had. It used to call Libra, then they changed the name to Deem, and then the project stopped. So here I'm distinguished between non-sovereign cryptocurrency, a digital money issued by private sector, and this types of non-sovereign cryptocurrency has some advantages, like it's there is no fees to conduct transaction, but still we have some negative consequences, some negative probably some negative reputation, since it's associated with money laundering. As I mentioned, I'm trying to somehow to pass some slides in order to be in line with the line, with 15 up to 17 minutes. Here we have, like, since we distinguish, first of all, we talk about that we have digital money, and at least we can distinguish between two types of digital money, the one issued by private sector, and now we are talking about central bank digital currency. Due to the huge or the trend of using these digital platforms, we have like several banks. To the best of my humble knowledge, at least we have like 40 central banks who are currently working on issuing central bank digital currency. Among these, like People's Bank of China, the central bank in China, the European Central Bank. Here in Sweden, we have the Central Bank of Sweden, Riksbanken, which is the first that in 2017, the first central bank worldwide that announced a digital project. We also have United States, like recently Federal Reserve released a paper discussing the central bank. But overall, we have like more than 40% central bank discussing the idea of issuing central bank digital currency. Here for these are screenshots. I took this screenshot directly from the central bank website. For those probably who would like to read more about this, you can access to this information. So briefly, I can say that according to International Monetary Fund, the central bank digital currency is a kind of digital form of money. It acts as a money. It's a unit of account. It's medium of exchange. It can store the value. And my conclusion, like generally speaking, and here I'm trying to take a quotation from one study that introducing central bank digital currency will represent a boom, a very innovative model of very innovative things in the world that we live. This is the reference used in my presentation, and thank you very much. I hope I did it in time.